Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler Trading. This is your weekly Edge show for Saturday, October 8th. Let's jump right in, take a look at what I'm going to be covering today. First up, taking a look at the current markets. Is it safe to be invested? Where are we? From there, we're going to take a look at some of the underlying news that was very impactful this week, drove a lot of the market action, and then also hot spot for the week. And of course, beyond the review of the current markets, we'll drill down behind that to see where the potential strength and weakness is that's currently taking place. So let's go ahead and take a look at some of those news items. First up, we did see a short-term extension to that debt limit was reached. The issue will be taken into account next week, but the fact that there was a deadlock that was taken care of really helped settle the markets this week. We did see U.S. Treasury yields reach a multi-month high. I'm going to review that because these higher interest rates are very impactful as far as what we're seeing in the markets currently. Also, oil prices, another highly impactful area. They did reach a 7-year high. So we're going to look at some of the areas that were bullishly impacted from that. And then also today, we did see non-farm payrolls came in quite a bit less than expected. And that in turn really flamed inflation fears because this lower payroll number is going to increase the cost of wages, which will eventually be passed on to consumers. And then also next week, we do have consumer and price index is going to be reporting. That's all about inflation as well. And then retail sales and consumer sentiment later in the week. Both these numbers have also been very impactful as far as the broader markets. So from here, let's go ahead and take a look at the S&P 500. And this is a daily price chart. I've gone ahead and added these simple moving averages. I have a green 10-day, purple 21, red is your 50-day, and then this blue 100-day simple moving averages. These moving averages are very powerful as far as whether they provide support or upside resistance as the markets potentially try and reverse any pullbacks. So let's take a look at where we are currently. We have been for a 1-month period now in a generally downtrending period. Lots of uncertainty in the markets. We talked about them in those news items, all impacting whether investors are feeling constructive or not. So this week we did see the markets end positively, up about 0.8%. However, it is not yet above this 50-day simple moving average. I will need to see that to turn bullish. But we did see the faster moving momentum stochastics turn positive. That's good news. RSI, not quite there. It needs to trade above that 50 to be positive territory, also indicating positive momentum. So we do still have work to do for the broader markets before I would advise jumping in with both feet. Of course, subscribers to my MEM Edge report are being alerted on a very regular basis as far as where the markets are and are there areas that you can be invested in. So from here, let's go ahead and pull the curtain back, take a look at the 11 underlying sectors in the S&P 500. I've gone ahead and added a relative strength indicator, sorted these 11 sectors in descending order because we want to be able to see where that relative strength on the upper left quartile here is relative to those weaker areas that you are not well served to currently be involved in, particularly if you are a shorter term investor. So first up, we can see energy stocks up here in the forefront. We talked about oil prices hitting a 7-year high. Super nice confirmed uptrend taking place here. Base breakout this week, multi-month, high volume characteristics, and then your momentum indicators are constructive as well. This is an area from, again, subscribers, my MEM Edge report have been advised to participate. We have stocks up 30% plus over this time period as this uptrend has involved more upside ahead. Second up here is financials. This is all about interest rates. Bank stocks in particular tend to fare well. We have a number of regional bank stocks that are taking advantage of this nice uptrend. Another area that's poised to break out, albeit a shorter, but a nice base breakout. Outside momentum indicators are positive. This is another area that I'm constructive on right now, and for the foreseeable future, I do see further upside in those regional banks. So from here, we want to take a look at areas that are potentially beginning to reverse their downtrend. This is the industrial sector, still has work to do. We can see a break above that 50 is still a bit away. Your RSI is positive, however, with this MACD having a positive black line up through the red crossover. This is an area I'm going to share with you, a hot spot in here that is quite compelling right now. And then from here, looking at weaker areas, again, making sure you're not invested and heavily weighted in healthcare stocks. And we'll get into one of the reasons as we move on from here. But certainly we can see this very pronounced uptrend here has been reversed. We did have a number of winners in this area on my MEM Edge report. As they began to break below this 50, we have removed those stocks. And it is in the beginning stages, but this steep decline will take a while to reverse. So from here, we want to take a look at some of the more relevant and impactful sub-industry groupings. Again, that RSI descending order. Up here, we can see this is crude oil prices up at that $80 level. That's a 7-year high, and also quite bullish currently for underlying oil stocks, particularly the oil producing stocks. Many of you may know there's an energy crisis taking place overseas, and they are in the throes of converting to using oil as a way to combat that. So lots in the way of global demand and supply. OPEC had a meeting last week where they decided to keep those lowered production rates in place. So nice supply demand dynamics that should continue to keep oil prices higher and hence those oil stocks. Next up, this is a view of the 10-year yield. I did talk about it trending upward, interest rates. And what I wanted to point out to you is this level going back to March. That's 1.75. The 10-year yield is currently at 1.6, so it could be ominous as we approach this prior high, as higher interest rates are not good for select areas, and I'm going to point those out right now. So 2 areas within technology. Overall, tech does not fare well in a rising interest rate environment. First up, we can take a look at software stocks. IGV is the ETF, and we can see that this downtrend, it's again very lengthy, a 1-month period. It is attempting to reverse that, but we're not quite there yet. And then another heavyweight area in technology that is currently not faring well are semiconductor stocks. The group did break below this prior low and is also in the throes of attempting to reverse this downtrend, but still has work to do. From here, I did want to go ahead and share with you that area in healthcare that is not helping, and that is biotech stocks. Very steep decline here. We can go back to that rising interest rate period back in February and see again at that period that biotechs did not fare well. This is signaling a risk-off appetite for the broader markets. So I did mention that I would share with you one bright spot area, and that is within the industrials, and in particular, it is aerospace and defense stocks. And the reason I'm going to point you toward this and 2 other stocks is because the U.S. Space Development Agency will be awarding a contract to those companies that provide these wide field of view satellites that are the next defense. And today was the deadline to submit your bids, and 3 different stocks are looking really quite constructive, not only because of the satellite and space war potential contracts, but we are also seeing vibrancy in defense stocks. So Raytheon Technologies, RTX, broke out of a nice multi-month base. Your outside momentum indicators are positive. I would certainly keep that one on your radar, looking very constructive. LHX is another satellite provider. This is L3 Harris Technologies. You can see it had been in a downtrend of late, but over the last 3 days, nice volume as the stock reversed this downtrend. RSI is positive. MACD, nice black line up through the red crossover. Look for a break above that net neutral zero. And then one last defense name also in the running for the Space Development Agency potential contract is Northrop Grumman Noc. And we can see the stock clearly has been running. It is overbought here with the RSI above 70. However, historically, the stock can be overbought but still remain in an uptrend. Your MACD is just now entering into positive territory, so I would look for a pullback, but NOC in a clear-cut uptrend. I'm going to leave it at that. Everyone have a great weekend, and I will see you next Saturday.